Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me right now is Shafin Diamond. He is the CEO and director at Victory Square Technologies. It's a publicly traded company. I got two symbols for you: VST on the CSE and VSQTF on the OTCQX. And Victory Square Technologies will be presenting at our upcoming investor conference, the Planet MicroCap Showcase, taking place in Las Vegas on April 25 through 27, 2023. For more information, to see the presentation, to meet Shafin, please visit planetmicrocapshowcase.com. And with that, Shafin, thank you so much for joining me today. How are you doing?
I'm good. Thank you so much for having me. Excited to meet you and all the other investors next week in Las Vegas.
Absolutely. And we're excited to have you there. So, we've done a few interviews in the past, and we'll get into some updates and stuff like that. But, for those that haven't heard the Victory Square technology story yet, can you give us that quick overview of the company?
Yeah, so Victory Square provides investors with a liquid way to invest in some of the world's most innovative early stage technology companies without buying a venture fund that requires accredited investor status or multi-year commitments. The pain point we saw was that retail investors generally don't have access to some of these great companies because they're private. They may be not based within their geographic region. And so we built Victory Square and founded it to really fill this early stage investment gap for a broad range of investors. So again, we provide VC investment access to the next generation of top companies in an audited, transparent, and liquid investment vehicle, effectively democratizing access to these next best startups for all investors.
Very good. So, last time we did an interview together, believe it or not, this was, I think, almost a year and a half ago. We published that on August 2nd, 2021, I guess more than a year and a half ago. And, what was interesting about that time, August 2021, things were still kind of, for lack of a better term, booming, I guess you'd say, before a lot of some of the macro stuff that was going on. So, thinking back from that time and where we're at today, would you say the thesis or the criteria of companies that you're looking at, has that changed at all? Or love to hear your thoughts there.
Yes and no. So I'll take a step back. My background, I started in the mid 90s in the tech space in what's called like the Web 1.com era. And over the last 20 plus years, you see these consistent themes. Innovation in tech, again, over time, it grows, it's exponential, and opportunity for wealth creation is significant, and that's always been the case. Throughout those years, though, you see things like interest rates, war, different types of challenges that hit and create a lot of uncertainty. But I think what they do is they create opportunities during those pockets when they happen. And so in 2020, when the pandemic hit, I think a lot of people weren't prepared for that. Thankfully for us, we were in the technology space. And so what tech did is it specifically around digital health is during that period, it was super valuable and allowed for a lot of people to continue operating, whether it be ordering food, ordering groceries, getting virtual care. And so for us, we've always been early on these successive waves, kind of looking ahead at where technology is going to take us. And thankfully, within our portfolio, we have access to all of that. But I would say that so we're not necessarily not looking at a lot of the areas that we've been focused on. But I would say the biggest change for us is the sector that we focused more so on, and that's the digital health sector. So when COVID hit, we had a company that had been working on rapid testing that had been in our portfolio since 2018. So, it opened up a lot of opportunity for us and allowed us to kind of go deeper down that rabbit hole into the opportunities within that sector. We just shared another one of our portfolio companies before we went online, Hydrate, which again, created traction for us. So I would say the biggest change for us really has been that within our portfolio, the digital health space and sector has really taken off. We believe it's recession-proof. I think with whether it's your Apple Watch, Whoop monitor, Dexcom, there's so much data that can be collected so that we can be more proactive around our healthcare, which is important for everyone. So, this is an investor conference. We want to make money, but what good is money if your quality of life or your health is suffering? So for us, that would be, I would say the biggest adjustment and change is the double down focus on the digital health space.
It's fascinating. I mean, look, you're right there in the middle of like, okay, how should we be thinking about what's this current landscape? You know, on one hand, you're like, okay, are we dealing with a near-term recession, and how do we think about that when evaluating potential companies to add to the portfolio, which, you know, our investor audience probably wants to see potentially more, you know, quality ads? Or do we double down on the portfolio companies that we have, because either they're just right now, you know, potentially actually hitting? So how do you think about that?
Yeah. So I think this is alluding to the previous point about, I think experience is super key, because I remember when I went through that first .com cycle and everything was up. I think I was 18 or 19, and I remember having a conversation with my dad, who, you know, again, who was a refugee who came to Canada, who worked his butt off for his family. And, you know, all of a sudden, you know, I'm making money. And I remember saying to my dad, you know, you got to work smart, not hard. You know, obviously dumb, ignorant comment on my part. And then the market crashed and collapsed. But through that experience, I saw that the market comes back, and you see these, you know, historically there are these cycles where you see you know, at the beginning of a decade, in theory, kind of a correction, recession, you know, a cleanup, and then you see a new, you know, bubble form, and then towards the end of the decade, again, it corrects. And so when you see these cycles, I think it's a lot of it's about timing. But what we see historically from a market perspective is the market continues to go up, whether it's 10 years, 20 years, 30 years, 40 years. And so, you know, it's not necessarily timing the market, it's time in the market. So for us, all of this noise that's going on right now, we look at it as an opportunity, because what it's doing is a lot of people are on the sidelines. This uncertainty scares people. They're almost kind of in the fetal position, you know, waiting, not knowing what to do. And for us, this is where you want to pounce. This is where entry points are great. If you look at entry points in 2021, the valuations made absolutely no sense. Today, it's a stock picker's market. So if you have the foresight to do the due diligence, talk to management, which is a huge advantage of being an investor in the microcap space, you can find some great companies and really get a good position today. So I look at it as an opportunity. Interest rates will do what they do. War will do what they do. You know, tensions between different countries will do what they do. Historically, that's always happened. But, you know, if you look back, these are the times when everyone's rushed out of the market, where you can, you know, really, really build a solid foundation to get that 10 bagger or 20 bagger. But again, you got to be, you know, diligent on looking at the companies you invest in, because there are a lot of, you know, rotten companies on the microcap space. But it's, to me, what I've seen is this is a great time to find good entry points for good companies.
Absolutely. So one quick follow-up to that, and look, I'm trying to keep it 5-10 minutes, but like, I mean, we could go on for a couple hours here. But, you know, I hear you on that point, and I'm a, you know, we're all Buffett neophytes here, right? You know, I mean, does this mean then that you still, you know, because we all know that some of the tech sectors that got just completely pummeled, right? And still in this winter, you know, crypto, NFTs, you know, a lot of these quote unquote next gen tech that are just really struggling. I mean, does that mean like, okay, look where others aren't, you know, go where things are most hated? But do you also think about it from the perspective of like, well, maybe there's a reason this is so hated? Like, will there actually be value here in the future? You know, I'd love to hear your thoughts there.
Yeah, so it's interesting because, you know, you talked about Buffett and you know, it's funny because as a tech investor or as a tech entrepreneur, I've followed that value-based investing, which is kind of in kind of contradiction to growth in the past. But, you know, when I look at the tech sector, again, historically over the last 20 plus years, I mean, Amazon was at $6 a share at one point and hated by everyone. So the one thing I see is when everyone's rushing into the market, then I want to pause, you know, because something, you know, the due diligence is not being done, and people are, you know, just rushing into anything, trying to catch a wave or chasing. And it's when everyone heads for the exits that I think you can find good value or better price value. Because, you know, you reference Buffett, you know, it's not enough to invest in a good company, but it's your entry point that really is the big thing in there. From a technology perspective, historically, you know, technology, we're moving towards more of a digital world. I mean, I have 2 kids, And I was blown away that my kid is asking me for V-Bucks, which is money to play Fortnite. He wasn't asking me for money to go to the mall and buy Nikes. He wanted to buy a digital skin. So long term, I think some of these trends, whether it be AI or digital currency or esports, these are trends that are not going away. I think what happened was people got too excited too early. So business models hadn't been formed, which again is what happened in the late 90s. .com went crazy. Business models hadn't been built out yet, and they were built up over time. I believe over time, these sectors are sound and solid. For us, we're in digital health. We're focused on artificial intelligence, machine learning, blockchain, virtual reality, augmented reality, gaming, and climate tech. I don't think that these sectors and theses and themes are going away. I just think right now, a number of them are out of favor, and they're not out of favor necessarily because of fundamentals. They're just out of favor because everyone is panicked and headed for the exit. So now, if you believe that like I do and Victory Square does, that these sectors are going to be big, now's the time to go and look at good entry points for IP and assets.
Absolutely. All right. So I think we're pretty much there, real quick and maybe a couple sentences or two, like I said, we're running up on time. You're going to be in Vegas, do one-on-ones, presenting the whole bit. What would you say is the main reason why folks should want to engage with you and Victory Square Technologies in Vegas?
So, apart from my personality and charm, no, the most important thing, the reason why we invest is because we want to make money. That's fundamentally the principle. Everything else is secondary to that. So entry point, the one reason why people should want to talk to me or learn more about the Victory Square story is that, we've got a NAV of around $75 million and our market cap is probably around 12. So we're trading at an 83% discount from, our net asset value. So the entry point is great. Our business model, we have 25 companies from around the world in some of the sectors that I mentioned, whether it be digital health, AI, machine learning, blockchain. So the second thing from wanting to make money when you make an investment is you want to get a good entry point, and two, you want to mitigate your risk. So now you're not investing in one thing. You almost have like 25 tickets or 25 chances to do well with one share. It's valuable for people to learn more about this story, but you're also getting a diverse portfolio of companies. So many shots to get it in the goal. So.
Very good. All right. Well, with that, Shafin, where can our audience go and find more information on Victory Square Technologies?
Next week, if you're in Vegas, hit me up. Let's connect. Or you can check out victorysquare.com. Email us at ir@victorysquare.com, or look me up on LinkedIn and connect directly.
Very cool. Well, Shafin, thank you so much for joining me here today. Really do appreciate it. Good luck. Stay safe, and I'll see you in Vegas.
Thanks, Rob. Cheers.